The chips made money. The leverage lost it faster. South Korea's AI-heavy stock market erased almost 40% from a June peak, even as Samsung, Electronics and SK Hynix reported roughly 150 trillion won in combined quarterly operating profit. That is why this is not an obituary for AI demand. It is a leverage and liquidity story. The KOSPI fell nearly 11% on Tuesday and another 6% on Wednesday, after dropping as much as 12.6% intraday. SK Hynix delivered record operating profit, up more than sixfold, but still missed elevated forecasts, and its shares closed down 9.6%. Samsung's own semiconductor business then reported record quarterly profit, yet Samsung had also fallen 5.2% during the rout. Strong earnings did not disappear. Buyers did. Reuters reported light trading volume, heavy borrowed exposure, and brokers forcibly closing losing positions as the crowded trade unwound. Single-stock leveraged ETFs are built to magnify daily moves, not to guarantee twice the long-term return, and they reset every session. In a violent sequence, rebalancing, compounding, and margin pressure can damage capital much faster than the underlying business deteriorates. Samsung and SK Hynix together represented more than half of the KOSPI's market value, so concentration turned two company moves into a system-level liquidity problem. South Korean regulators had already halted new listings and advertising for these products. They then moved a 30 million won cash requirement forward to July 31st and discussed limiting individual exposure to as much as 20% of investment assets. Those steps may slow new risk, but they do not prove the forced selling is finished, and they do not reveal how much of the decline came from leverage versus valuation, China competition, or disappointment against extreme expectations. Liquidity had stopped reading the earnings release. That limitation matters. Public evidence supports the claim that leverage amplified the sell-off, but not that leveraged ETFs caused every percentage point of it. Even after the collapse, Reuters said the KOSPI remained up 41.5% year-to-date in dollar terms. Another reason not to confuse a leverage unwind with a completed fundamental verdict. Confirmation would be continued violent swings, weak market breadth, more forced unwinds, and chip shares failing to hold even after strong cash flow evidence. Invalidation would be several stable sessions, reduced forced selling after the new deposit rules, and price action returning to margins, memory pricing, and customer demand. The next checkpoints are the July 31st cash rule, the next US semiconductor session, and South Korea's August worst trade data. If volatility cools while chip fundamentals remain firm, this looks more like a market structure accident than proof the AI cycle broke. If liquidity stays poor, Korea becomes a warning for every crowded AI trade built on borrowed conviction. The earnings were real, the leverage was louder.